Hey guys, welcome to Market Mondays. Hopefully you guys had a great weekend, great holiday weekend. I apologize, I'm about 2 days late on the Market Mondays. Markets were closed on Monday, and then Tuesday was just got out of hand. So getting right back into the schedule and giving you guys a Market Wednesday. So we're gonna get into the whole all of last week and everything that's gonna go potentially happening this week. Before I get right into it, do a quick dad joke. Dad joke today is, why is there a gate around cemeteries? Why is there a gate around cemeteries? Because people are dying to get in. Get it? People are dying to get in. Get it? Pew, pew, pew. All right, so getting right into it. Last week wasn't a whole bunch of news, but one of the things that kind of helped mortgage rates along last week was the announcement that the president directed Fannie and Freddie Mae through the FHFA director to spend about $200 billion on mortgage-backed securities. If you guys followed on the last Market Monday, we talked about this a little bit, and right now it's still unknown as to how those numbers or how those funds are going to be used. If they're going to be used all at once, if they're going to be spaced out. Like there's a directive, but there's no execution yet, if that makes sense. So we still on the unknown when it comes to that, but keep in mind the president also announced the day before that $200 billion directive that we needed to spend about $1.5 trillion toward our expanding our military. And with everything going on right now, we really don't know what's the priority here. So it sounds like we might be wanting to expand our military depending on the situation, but $1.5 trillion to this versus $200 billion to this. Now, keep in mind, these are within the balance sheet of the FHFA. Like that $200 billion does exist. They do have it available. So that is more of a real thing than the announcement of the $1.5 trillion thing toward the military. So we'll see how this goes. Now, going into this week, fortunately, mortgage rates since yesterday have popped up a little bit. We saw a really nice low last week, and now we've seen them pop up. So why do they pop up? So if we kind of look at the charts here, we want to kind of show you that there was a nice little bump from this point here, which was literally just yesterday. So what happened? There was a number of things that happened, but essentially the two main things that caused mortgage rates to go up from last Friday, it was the last time the market was open, was last Friday, all the way and then next was Tuesday, was due to the tariff threats on the EU. So that caused mortgage rates to pop up due to that. And then the other piece is that the yields in Japan, the treasury yields, they have their own treasury bonds and yields and things like that. Those yields went up as well. Now, right now they made an announcement that it's really not that big of a deal. There's going to be a time of a fluctuation, but things should level out. So, and that's kind of what we're seeing today. Things did come down from the highs of yesterday. So you do see a market, you do see the line kind of going down a little bit. And I do think this is true that it will level out. So those are things those are like global things that have a really big impact on mortgage rates. So that gives you an idea of like the scope of all the things that impact mortgage rates. We have things like inflation in the US, we have unemployment rate in the US and jobs numbers, but then we have things that are global, like I remember when the Ukraine war broke out, mortgage rates really improved then. And there were times where the opposite happened of something else, like for example, the yields in Japan, the treasury bond yields in Japan going up, causing our rates to go up. So, and then the threats of tariffs in the EU. So there's all these global impacts as well as domestic impacts that happen that can really have a major impact on mortgage rates. So it's not just one thing that impacts mortgage rates, but I can definitely say still the main two things to keep an eye on is still for domestic is inflation and unemployment, just because those are more predictable as to how they're going to impact mortgage rates. So, and they come at a regular basis. So we know those two things are going to still impact mortgage rates down the line. Now, moving forward, tomorrow we get a delayed inflation report for October and November. Right now, it's expected to potentially go down a little bit, and that's the forecast. The forecast is expected to go down by 0.1%. So if we do get that number, there's a chance that mortgage rates might actually like that and come down from the fluctuations we had yesterday. So Overall, it's not a big concern. I mean, you're going to have ups and downs, just like you see in this chart here. You have downs, you have ups, but overall, you can see the overall trend is down. One of the things I look at when I analyze these charts is are the highs getting lower? So meaning if the peaks, every time it peaks, it's lower than the previous peak, then we're looking good. We're trending in the right direction. And same goes as to the lows. If the lows, if the valleys, if the lows are lower, then we're trending downward. So that's just because we have fluctuations in the middle doesn't mean mortgage rates are going up or going down in the long term. It just means we have fluctuations, and that's just what happens. So to give you guys an idea, stocks are mortgage rates and stock can just be as volatile. That's what it boils down to. Equally volatile. So yeah, that's the main thing when it comes to what the news of this week is. Tomorrow, I will be doing a 2026 market forecast. We're going to be going into the expected forecast with mortgage rates and how all these other things impact mortgage rates. The economy, the real estate, what's expected with depreciation, what's expected with the Fed. We're going to talk about all that stuff and together talking about all these mandates that the president wants to do and see how it all goes. So we're going to talk about all sorts of stuff to kind of give you a better idea of how to plan potentially for a future refinance this year, or if you're a real estate professional, how it's going to impact your real estate business so that you can make sure that maybe you can use this information to help market to your clients or potential clients, or even your sellers that are looking to sell, but they feel like it's too expensive. So I think this might be a really solid impact as to how you plan on moving forward when it comes to your business. So otherwise, just trying to get caught up. So we'll resume back to normal schedule back on Monday. Otherwise, that's all I got for you guys. Nuke out.